Good morning, everybody. Wall Street Jesus again. Saturday sweep series. Today we're going to take a little different route. Well, not really, but we'll focus. We'll give a little more attention to the strategy trading side of things rather than the market and stocks themselves. I mean, if you have any questions on the market stocks, we can leave it to the end of the webinar. I mean, I'm just getting a little tired of, what do you think of Netflix? 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 So it is what it is. The market's been on fire. Nice little slow melt up. But I really want to touch on a subject that I see more and more of. And like I said, I was a broker trading around, professionals managing money for the most part. Since I've been in the Steamroom, I see a lot of different traders, a lot of common habits, and one in particular we were discussing throughout the week with members. I want to touch on today, and again, briefly. This is not going to be an in-detail, full-fledged webinar where we touch on strategy, but just briefly run through a couple things, and maybe, especially if you're trading off flow, you can take one or two things out of it that can help you avoid, as I like to call, getting stuck in the middle of trades. And I'll tell you what I mean by that. I want to get this out of the way initially because at the end, I forget, I get questions, I scramble. Very simply put, anything we discuss, flow-wise, strategy stuff, you can go to wallstreetjesus.com, okay? You can find anything, any questions you have, the answers will probably be here. There's a strategies tab right on the top. You click on that, and we got a bunch of different short little write-ups, okay, on what we look for, how we use it, how it may be useful, of use for you, and so on. Okay, so if you go to wallstreetjesus.com, you'll find all that information there. We have a new offer on the table for Saturday Sweep Series we're doing now. We were setting this up. We were always willing, looking to do this, a 3-day trial for free. Okay, we were doing the 50% off the Steamroom, but now we have a 3-day trial. It's free. The only difference, and this is basically the conclusion we came to solve the issue we had, it's read-only access to the Steamroom. Okay, so in other words, you can't post in the room. The reason we wanted to do that is a lot of times some of the freebies out there would come in there and just post a ton of noise. And it's just something we really don't want to be involved in. All right. So we got a 3-day free trial. You can get a feel for what we do here. You'll have access to all this stuff. This filter here. So if you don't want to pay attention to what everybody else is saying, this is just the flow in my commentary. You get the alerts, the heat map, access to the search, and I think the best part of it is obviously the live feed, audio, video throughout the day, play-by-play on the action that comes in. All right, so again, wallstreetjesus.com, that's where you access all that information. You can hit myself or Lucci up on Twitter or anywhere you know where to find us if you have any questions. Okay, if you have any questions today, leave them for the end of the webinar and ask away. Okay, here is the topic I wanted to discuss, okay? And I don't have no fancy-pantsy slideshow. Those of you who know me know I don't even know what the hell to do in regards to that. But basically, this is what we're going to discuss here, okay? I'm talking about getting caught in the middle of trades where it becomes the most stressful point of navigating a position. Okay, and what I mean by that exactly is you're looking, you get into a name and you really don't have a plan before you start clicking the buy button and picking up calls or owning the equity, and you're planning as you go depending on whether the stock is up or down on the day. You get in initially thinking you're going to get a short-term trade out of it. Now you're getting a little bit greedy. You're looking for, hold it a little bit longer, looking for more upside. Why? Because the stock's been pushing higher. and your emotions are wrapped up, and you're feeling confident about it. And then the stock turns against you, and you're in no man's land now, right? That's where I know instantaneously I get, a barrage of questions. Jesus, what should I do with this? What should I do with this? What should I do with Facebook? What should I do with Netflix? And anytime I see those questions, I always ask myself, like, how would I know? You know what I mean? I don't know how to respond to those questions, because what were what was your plan when you bought that Facebook? Like, what were you trying to do? Were you going to tuck it away for a year? Were you looking to flip it over the next 2 days if you had some strength? Were you going to keep a tight stop loss on it, because you didn't want to hold it too long? So you get these questions, and I understand why, because that player is emotionally wrapped up into it now, stressed out because he doesn't have any guideline or plan, right? He didn't figure out why he was looking to buy it initially, or maybe change that plan, and now it's all based on emotion, okay? And 9 out of 10 times, we all know what happens, right? You sell it, the stock ends up bouncing, going higher. You hold it, there's another leg down, okay? And you just feel it in your bones, and it's just a bad spot to be in, okay? The only way to avoid that is to have some sort of game plan before you start pushing the buttons, to avoid that middle, getting stuck in that middle, especially those of you who trade options. You got to have something mapped out, and we'll go over, just again, very briefly, not a in-depth detailed plan, just something quick that you can do that will at least keep the stress out of the equation, okay? Because that stress, when navigating a position, that will drive you nuts, okay? And you're not going to last long in this game when you're stressed out over each and every position you take. All right, so we'll go over that. We'll go over some examples, and then I'll take some questions from you guys, or even some input on your end. If you guys have, a certain style where it helps you avoid this type of situation, or, an example of recently how you were stuck in the middle of a name, and how you got out of it, or what you did about it. So we'll take some questions at the end after we hit on a couple things. All right. First off here, you've heard me say this how many times now, okay? Knowing and understanding your game plan, your style of trading before you start pushing any buy buttons is so important, okay? So important. And I sound like a broken record because I talk about this at least 2 or 3 times each Saturday with you guys. All right, and what I mean by that is, if you, and again, we use Wiseguy Sweeper Flow primarily as our initiator, as our indicator, okay, of whether we should get in something or not. So I'm going to use that as an example a lot. And a lot of people trade options, so I'll use that as an example a lot as well. But this applies to anything you're trading, okay? And like for me, I'm day trading, okay? I know no matter what, when I get in position, I'm going to be out of that position no matter what that day, okay? Now, for me, that's not going to change. If I decide I want to swing something, again, I understand and I'm mapping out my plan of how I want to swing trade that position ahead of time. In other words, I'm not turning my day trades into swing trades. All right? So, and that's what I mean by that. All right, so, and it goes to the next point. It's totally fine if you adjust your style of trading to a particular name, like I just mentioned, maybe something you want to day trade. Maybe this is something you want to swing trade, all right? Or maybe you change it according to the market environment around you. Example, market is choppy. So you want to keep things shorter term, let's say. Or the opposite. Maybe you want to take a longer term approach to avoid that chop. Okay, so you're changing your style according to the current environment. That's not a bad thing. That's a good thing. But knowing ahead of time before you getting involved in that name is what I'm stressing the importance in. All right, you got to, like I said, you got to have some sort of roadmap of how you want to navigate that position. Okay, and when you avoid trying to make those decisions on the fly or changing them on the fly, it alleviates so much stress out of the equation. And we'll go over examples on how and why that is. Okay, and this is the reason why, you don't want to get caught in between where a day trade becomes a swing trade. Okay, and you're changing your guideline just because of the emotion you're feeling or the stock is doing at that time. All right, most of the traders I see, especially on the option end, they're getting beat up when they're getting caught in the middle. All right, and let me give you an example of what I mean, just in case you're scratching your head wondering what the hell I'm talking about. Let me think of a good example. JD, okay, this is a good example. We were talking about this in the room this week. So JD catches some flow, okay, cheap premium speculation type flow, looking for a bounce short term. Okay, they're not going 6 months out, a year out. They're not laying big wood. They're coming in, they're buying cheap 20 to 40 cent calls, and they're looking to play a bounce. Okay, so a lot of traders, we interpret that. If you're looking at JD, the correct interpretation of that flow, if you're looking to make a play for yourself, would be something similar to that. Okay, you're looking for a quick bounce over the short term, and you're going to be willing to lock that in. And if you don't get it, there's got to be some sort of risk management stop loss in place. Now, it's okay. It may be your stop loss, your risk management you have figured out ahead of time may be for those 25, 30 cent calls to go to zero. Okay? As long as you plan for that. You understand? As long as that was your intention as far as your risk management there. All right? So, and this is a good example of exactly what happens a lot of times. JD gets a little lift like this. Okay, so some traders will lock that in, right? They were looking for that quick move, lock that in. A lot of traders, when this is pushing higher, right? JD's looking like it's bottomed out, looks like it's pushing higher. You see the market going higher as well. You see some Chinese stocks going bananas out there. So now all of a sudden, a lot of traders, what they'll do is they'll say, you know what? Even though I have weeklies or 2 weeks out, whatever the case may be on the call side, this looks good right now. I want more. I want more. So now they're changing their plan. Okay? So let's go back now. They initially got in calls, whether they're weeklies or 2 weeks out, short term, looking for that quick bounce. And now because of the stock looking good, they're changing their outlook and their plan, but they're in the same calls. You see where the problem is? It's okay if they took the approach where I'm going to go 3 months out because I think JD looks good and eventually can test highs. But the calls that they're in didn't change. Their outlook and their emotions changed their plan that they had ahead of time. And they never take into consideration, we never take into consideration when things are looking at their best of this happening. Okay? And then this happens and that's getting caught in the middle now. What do you do? Right? What do you do? That is a common thing, especially in the option world, that I see time and time again, traders find themselves in this predicament. Okay? And again, we'll go over some of the stuff, not in depth, but briefly of, how maybe you're never going to be able to get out of that completely, but how to take the stress out of the equation, where you don't have to ask everybody and their mother what they think of JD because they have no clue. That's the whole point. Nobody has a clue. The only way around it is to have a plan for whatever it does. All right, so how do we avoid doing this, right? How do we avoid getting stuck in the middle? And like I said, the most important thing initially, in my opinion, risk management is the number one thing, but you have to have an idea of what you're looking to get out of the trade. These are the 4 different ways that I've traded throughout my career. Day trade, meaning I'm getting out the same day, no matter what, okay? I'm looking, whatever quick move I get from me, I'm taking. My big winners intraday, a lot of it comes with luck. I raise a stop loss and something just keeps going. I'll be the first to admit it. I get lucky. Okay, yeah, I made the decision to not maybe take that profit and raise a stop loss, but I was fortunate enough, maybe the market took off, maybe the name caught some rumor or chatter, I happened to get lucky. But I know that me as a day trader, my goal is to trade things that I'm looking to get a quick bump out of now and get out no matter what. I'm not changing a name that I get in from a day trade to a swing trade to a long-term hold on the floor. Okay, short-term flip swing. This is, a lot of people like to lump everything into swing trading, but there's so many different forms of swing trading. This is more of where if you have that profit, okay, you'll take it that day, but you have intentions of giving it that extra day or couple days to see a little more upside. Okay, so it's a little more longer term than a day trade, but an in between from the next one, which is an intermediate swing trade. That's something you're looking to hold weeks, maybe a month, 2 months. All right, and then the last one is positions. A longer term outlook, something you're looking to maybe add on dips over time. All right, and I know it sounds corny, but the importance in understanding which one of these things you're doing is crucial, okay? Because if I'm a short term, if I'm looking, let's say for example, I'll give you a perfect example, okay? Marriott would fit into the short term flip swing trade type strategy. All right, we saw Marriott, they came in, they bought some weeklies, I think it was earlier in the week, and you look to get in, ride it for a couple days, and get out, okay? This is not something that I want to add on dips if it comes down. This is something I want to get in when I see that flow, and then I want to sell into strength over the next couple of days. If I don't see momentum over the next couple of days, I'm looking to get out of this thing, right? That was my plan there. So I wouldn't be looking to add on dips for this particular strategy. All right, as opposed to if Marriott caught some March bazooka buying, or you know what I mean? They were loading up March calls, and you're looking to build a position in Marriott, but you don't want to put here, you don't want to start a whole position all at one level. You want to give it some time. Maybe it comes in, maybe the market pulls, you can add there, and you're looking to build position because you have the time behind it. Again, you know that ahead of time. You don't want that flip short-term swing trade to turn into that just based off emotion. All right, so those are the 4. All right, so now that we got that, we can go to what should we, what to look for. Flow-wise, you should be focusing on what's relevant to your strategy. Now, sometimes, there's flow that can apply to all strategies, a lot of times. But for the most part, you want to focus mostly on the stuff that will help create momentum for your style, okay? I'm a day trader. Now, if somebody goes out and buys, again, March, April calls of next year, I mean, it's got to be some really special action for me as a day trader to think I'm going to get much momentum out of it now. Okay, so that flow doesn't necessarily apply to me, but what Jim or Ani or Sean out there or any of you guys, that might be picture perfect type of flow for you if you're looking to swing the name. Okay, so it's important to focus on the right flow. And again, there's some flow that will apply to all styles of trading, but here's where it becomes a problem. Okay, again, I'll just use JD because it's off the top of my head as an example. If they're buying JD weeklies or JD Octobers 2 weeks out, and you're taking the approach of building a position and holding it longer term and buying dips, that's okay, but that flow wasn't for you, right? So you're basing it on your homework and what you're seeing in JD. But if you're looking for flow as an indicator of that, you want to see somebody come in and swing a hammer in some Jans, Febs, that sort of thing. You don't want to see cheap speculation in weeklies and 2 weeks out. If you're looking to build a position, you're looking for a move, what? Maybe test these highs right here. So you want to see somebody go out and lay some wood with some time behind it. The flow we've been seeing in JD, for example, is more for that day trade, short-term flip type strategy, right? They're playing weeklies and 2 weeks out, looking for just a quick bounce. So that's where it becomes important, just understanding, the right flow to look at for your particular style. Again, it could be your style that day, could be that your style for that particular name, or like me, could be a style that you're stuck with for a long period of time. But knowing what the hell you're doing ahead of time is the moral of the story here. All right. So navigating the trade, and we get into style of entry, risk management, taking profit, when to pull the plug. Whew, you could write a book on this, right? And like I said, it's just a matter of knowing what you want to do. If you're going to buy dips, all right, or if you're going to buy a name as it comes in, does it make sense? You're looking to hold something for just a couple days and take that approach as far as a style of entry? Probably not. All right, so you wouldn't look to do that. As far as risk management, stop loss, a couple examples. This is another huge thing, especially in the option world. I don't think anybody really has one out there in the option world because it's so hard to do. It's almost a case-by-case basis, okay? You may be able to put a stop loss on some Bank of America calls because they're liquid as the Atlantic Ocean, right? They're tight. It's easy. But you get an under-the-radar name, or not even an under-the-radar name, a well-known name with some thinner-looking contracts out there, the spread alone in these things, you're stopped out on. All right, so again, knowing ahead of time what you need to do is how to solve that issue. And I think a lot of times, we spoke about this for months now. You've heard me badmouth options. Options are a tough game, okay? They're really, really tough. And I know somebody who watches Flow and talks about options all day probably shouldn't be saying that, but they're the most difficult game out there. But right now, in my opinion, is as good as a time as ever for call buying. Why? You got a predefined risk. In other words, you can take the approach right now. I'm willing to lose what I put into these contracts, and that's my stop loss. Think about how much stress that alleviates. All right, so if you're buying something shorter term, okay, looking for a quick pop like the JD, and you're paying 20, 25 cents, you're willing to write them down to zero. instead of, oh, I'm going to stop myself out at 10 cents. All right, because so many times, again, we see the options for a couple of days, the stock doesn't move, they drop the bid, they suck out some premium, and then 2 days later they explode. It happens so often. Okay, now I'm not even talking about the stock doing anything. The premium drains out of the calls because of time. I think it's that approach as far as risk management right now is so underused, it's crazy. I think it's a beautiful thing right now, a beautiful thing. Now, you can't size up as much as you would like, right? Because you're willing to let it go to zero. But who cares? What are you doing? You're looking to size up here. That's what you want to do? You're looking to size up there? Yeah, and I think going forward, even if when we see a pullback finally and when that comes, I think going forward, if you're an options player, I think taking that approach is a solid approach, whether you're playing over the short term or longer term, because it takes the emotion and the stress out of the mix. You don't have to ask me or anybody else the question, should I pull the plug here? Because we don't know anyway. Nobody knows that. You already have come to the decision that your downside risk is zero. All right, so that's an example of, what did I do with the thing here? Risk management right now that, would fit perfect for the current market conditions. Taking profit and pulling the plug, setting price targets. This is another whole can of worms you can write a book on. Me personally, I don't believe in target prices. Analysts put target prices out there, and we know how good they are. They're useless, completely useless. All right, and the reason I don't like targets, again, I don't know, JD. Let's pick on JD, which I think can bounce next week, by the way. But JD, if your target here was 41, okay, what does that mean? 41 or bust? Does that target ever change? So I don't know. The target for me is a cop-out from making decisions, but it doesn't really work because I hate to say it, but unless you're using some sort of strategy to come up with that target, and God knows how efficient that is, where do these targets come from? So there's no way to get around selling too early. There's no such thing, guys. Okay? It's been driving me nuts for 20 plus years. There's no way around it. Just understand, you're never going to get the tippy top, ever. Ever. Sometimes you get lucky, you sell, some selling after that in the following days. A lot of times you're going to keep going, okay? Especially if you like to sell into strength like I do. It's just part of the game. And no one takes into the equation, like if you sell here, you got another up day out of it, right? Or if you sell here, you got another up day out of it. You should have held, but nobody takes into equation what happens, the following week. So the moral of the story is just have an idea of what you want to do ahead of time, and it makes it a little bit easier, So in other words, like I said, if you're looking for the quick move in JD, okay, you get that little quick move over the coming days. Maybe you want to raise a stop if you have the equity. You raise a stop intraday. Maybe on the call side, you're willing to give, a nickel off your bid there as far as looking for more upside. But you got to understand you were just looking for this, and don't hope for more than that if that was your intention. In other words, if your plan was to buy 39, okay, and to sell in the coming days if there's some momentum, and you got that, if it goes higher, who cares? That wasn't your plan anyway. That's luck. Does that make sense? You know what I'm saying? Like if you were, like here, for example, like even the Marriott. If you bought early in the week off the flow and you were looking for a grind or a melt up through most of the week, once you got that and take that, be happy. Anything after that would have been luck anyway. You know, you got what you were looking for. That's a win. So that's, for me, that's the way I look at it. Now, don't get me wrong. I still curse things out left and right when they continue to go. But, I mean, there's nothing you could do about it. What do I do with this now? Oh, yeah, I X'd it out. Look at this. Hold on. Bear with me. Okay. There we go. All right. So, yeah. So that's taking profit, again, which will frustrate you to no end. There's no easy answer for that. Pulling the plug is another tough decision. And, again, that goes back to risk management as far as whether you're you put in what you're willing to lose on the option end or stop loss. And what I mean by that's the JD, okay? Let's say you were looking for this, but didn't end up taking it. You have to make the decision of where you take that risk off the table. Now, if your decision ahead of time was for those options to go to zero, great. Then you have no decision to make. That's fine. That was a decision you made ahead of time. But if that wasn't your decision, once you start to lose this, you have to pull the plug. You have to pull the plug. You were playing for this. You didn't get as much as you thought. Ran out of gas. Again, unless your risk management approach there was to let the calls go to zero, if you're in the equity, you have to pull the plug. If it goes higher, it goes higher. Again, that wasn't what you planned for ahead of time. You were looking for that short-term bounce quickly. This obviously wasn't in your plans. Oh, look at this. Okay. And, all right, so we said setting price targets are okay, but knowing what to do when the price targets aren't met is even more important, okay? So, that's, again, crucial when it comes to these things. And like I said, each and everything and I'll give you quick examples as far as flow, because I know there's a lot of members on the webinar that would have an interest in that. Day trading, it's pretty easy as far as what flow we're looking for. For me, I ask a simple question: can I see momentum created out of that activity now? That's the question I ask myself on any of the sweeper flow I see. If the answer is yes, I fire and have a stop loss. That's my approach. Okay, so that's for day trading. Short-term flip swing, what type of activity you would be looking for there is like the JD. Okay, like the JD action we saw, which, again, we saw come in Friday. All right, so let's say you didn't play JD. And JD, they were coming and buying October's Friday. You're buying JD here. Again, they were cheap, I think 30 cents, 25 cents. So you're buying JD here, and you're looking for that quick bounce. You're not looking for new highs. You're not looking for a test of 46. These things expire next week. Okay? So you're looking for a quick bounce. If you get it, you're looking to sell into it. If you don't get it, you're either looking to stop yourself out or you're letting those calls go to zero and you plan for that. All right? But that's that short-term flip strategy. That's the type of flow you would look for. Marriott. That's the type of flow you would look for that particular strategy. Okay? You're looking to get in, and you're looking for some momentum to build up over the extreme short term. Sometimes you'll get it that same day. At times we see that, and you're willing to take that off the table. Okay, but the moral of the story is you're looking for the flow that is structured around that strategy. Okay, you're not necessarily looking at the monster buyer in GBT that we saw out to March. Okay, you wouldn't necessarily take that approach or that strategy because that has nothing to do with the next couple days or week. So those are just a couple of examples of what you will look for as far as that short-term flip swing type strategy. Intermediate swing trade, which a lot of you fit into. I think most of you fit into this short-term flip swing trade, but intermediate swing, you're looking for over the course of, let's say, mostly months. You know, I would say 1 to 3 month time frame around there. And you're looking for decent upside, right? You're not looking to flip. You're not looking to take it quickly. You're willing to risk some of the shorter term profits for more. That's basically the approach you're taking there. Okay, so that would be, you're willing to give this little move up in JD for the possibility of more over the next couple months. Okay, make sense? Now, the flow in JD hasn't been for that. That's my point. The flow in JD hasn't been for that. They're playing Octobers. You would need flow in, like I said earlier, Jans, Febs, March. And again, as far as risk management, it's the same thing. You can take the approach, you buy some Feb calls, put in what you're willing to lose, let them go to zero, stress-free. Again, you can't size up like you would like, right? That's the problem there. That's the problem with every trader who's having trouble finding consistency. It's always, I'm not going to make enough money. Never, I'm not going to lose a lot of money. It's always, I'm not going to make a lot of money. That's what they're worried about. But if you take away that stress of when to pull the plug and stop yourself out on the downside, maybe you do get lucky over the next 3 months. And JD goes back to new highs. So you had a predefined risk, and you get a little lucky, you can make some really nice money. So that would be the swing trade. Oops, why am I having trouble with this? Okay, that would be the swing trade intermediate term type thing. I'm talking about months. Okay, like within a quarter, put it. So 3.5 months, that's my definition. Longer term stuff where you would add on dips, obviously is something you want enough time, okay? If you're adding on dips, you really need time on your side. You can get destroyed if you're adding on dips in weeklies and 2 weeks out. I wouldn't recommend doing that. Maybe there's people who can do it. Say, I wouldn't recommend doing that. So what would be a good strategy for that? You know, we've seen leaps all over the place, right? We've seen leap buying all over the place, where you can build a position and look to add to it if you were playing the equity or the calls over time. And you could take a nice and easy approach. You can even do that on the intermediate type swing, you know, where you're going to hold 3 months, but it's got to be worth it. You know what I mean? It's got to be worth it. You got to say to yourself, at least you're holding 3 months if you're looking to add on dips, especially on the way down. So, you know, maybe it's a name like that GB, what is it again? GBT, that saw that those missiles come in. You know, you say to yourself, all right, they're March calls. So instead of taking a full position here, I'm going to put on a little, see how it looks in a couple of days, You know, maybe I like the way it looks, came in a little bit, I'll add a little more, look to add on weakness, and then eventually get to a position I'm comfortable with. Otherwise, on names like Marriott, if I'm looking to flip this thing over a couple days, I'm not adding on to it. I'm looking to get out of this thing. You know, another good example of getting caught in between, by the way, this was a beauty. Snap. It was a beauty. Perfect example. Even better than the JD. I don't know why we kept going back to JD. JD, you know, it's only been a couple days. Snap, if you, and a lot of you remember because you played it, Snap caught 2 batches of activity, okay? They really came after aggressively weeklies into that Apple event. You guys remember that? They were going nuts. Weeklies were flying off the shelves, okay, into that Apple event. The weeklies, those calls, more than doubled, okay? We also, when they were buying those, we also saw some October buying. I think it was October. October buying come in, okay? So you had some weekly sweeper activity and then some October buying as well. And you say to yourself, how do players lose money in a name like this when you try to combine the two? You know, that old saying to have your cake and eat it too. I mean, that's where you lose money. That's where traders get caught in the middle. And what do I mean by that? The weeklies more than doubled. Okay, so if you played the weeklies looking for the short-term move, you doubled your money. You should be doing cartwheels. If you played the Octobers at that time, okay, and you were looking for more than the move into that event, that means you were willing to give up that quick short-term move because you were looking for more, right? But what happened was traders got in and they decided to mix the ingredients. In other words, take the approach they should have had in the Octobers and put it in the weeklies, or go in between all of that. And then get, you know, jerked around and whatever. But this, you know, this was a perfect example of having both situations. You know, if you were in the weeklies, you would have taken it. The weeklies expired a month ago. The Octobers, you know, depending on how you played it, again, if you put in what you were willing to lose, you're still in them, and you're probably making money now. So that's what I mean about caught in the middle. There has to be that plan ahead of time. And again, it's not going to end up being magic. It's not where you're just going to start making money with everything you touch, but it's going to take away a lot of the stress out of this game. And when you take away the stress, sometimes light bulbs go off. They did for me. You know, and what happens is a lot of players in this game, you see it, they're stubborn. They think they know so much, you know. They know Snap, they know the company. You know what I mean? Or they know Facebook, you know, Facebook is this and that, it's going to be $10,000 one day. And they get caught up in this bias that they have where they really don't know shit. The smartest people out there don't even have a clue on some of these things, how they're going to end up months from now. But they keep feeding themselves this nonsense, and, you know, it ends up getting them into habits where they find a way to lose money. But this guideline here, I know it's not much, okay? And like I said, I wasn't looking to get into detail here, but just something simple like this, you know? And if you have, again, your risk figured out ahead of time, the game gets a lot easier, guys. It gets a lot easier. Okay, and then once you start taking a realistic approach and saying, you know what, maybe this game isn't about seeing 6,000% in weeklies consistently, because there's no such thing. You know, maybe this game is about winning more than losing and coming out in the green and getting better at that as time goes on And when you get better at that, that means more money in your pocket. But these are things you have to figure out, and it takes a lot of the stress out of the equation that you can avoid trying to figure out on the fly when your emotions are involved. When your emotions are involved, you are dead. You cannot think clearly. It's impossible. If a stock's going higher, you think it's going to the moon. If a stock's going lower, you think it's a piece of shit, you want nothing to do with it. It's that simple. That's how you're going to feel. That's how we all feel. So if you have some sort of guideline ahead of time, you have some sort of roadmap plan ahead of time, you got that to lean on while you're emotionally wrapped up. And then you say to yourself, you know what? What am I stressed about? I was willing to let these calls go to zero. What am I getting all stressed about? Right? As snap is coming down, like, what am I worried about? You know, that's my stop loss. They go to zero, they expire worthless. What are you going to do? Maybe this thing works out by expiration. So anybody, I mean, does it make sense? Anybody have any questions as far as, or situations or predicaments they've gotten in similar to this that they want to share, or share some commentary on an approach maybe they used or how they got around things like this? Randy saying, great guidelines, thank you. Yeah, and again, it's not, you know, these aren't the 10 commandments here, right? These are just, it's just a simple little outline here of, in other words, if you take this, okay, start with this, and then build a plan around these simple things, again, it takes a lot of stress out of the game. And that's the whole moral of the story today. Steven's asking, in regards to stops on options, you talk about this a lot. So to clarify, when I use stops, I never use the price of the option as a stop. I use the price of the underlying, and usually have the option set to the market price. Okay, this is interesting. You know, Steven, that it's pretty interesting that you mentioned that, because quite a few people have mentioned that to me. Okay, and if that's worked for you, that's exactly what I'm talking about. That's perfect then. That's perfect. You understand? There's a strategy there. There's a guideline there. You know? So in other words, what Steven's saying is he feels most comfortable that he's got, let's say, Snap, again, using it as an example, he's going to buy, he's buying some calls at 16.5. Okay? He's got where if the stock hits 15 or the stock hits 16, let's say, he's selling the calls, regardless of where the calls are at. Now, the issue with that is a lot of times, and this frustrates a lot of option players. I mean, it used to frustrate me to death. You'll have a stock just go sideways, but the calls will drain out. So that becomes the issue there. But if it works for you and you've been using that strategy, by no means am I going to say it's wrong. You have, again, a guideline. You have a strategy. And that's music to my ears. BW saying, my problem is the exit. I take two smaller winners, like yesterday in CMG. I had the 310 calls, sold at 5, okay. And then hit over 18. Never let the initial move get too far against me. So, oh wait, I'm combining things. Hold on one second. So BW is talking about CMG, had the 310 calls, it hit over 18. How can I stay in longer and not get whipsawed out? Now, CMG, I'm sure the spreads on these calls are ridiculous, right? I'm sure they're absurd. Because I don't even see flow. Once in a blue moon, I see flow in CMG. So I'm sure the spreads, the liquidity on those things are abysmal. So that's the problem. The only solution, okay, the only solution, BW, is simple. There's no other way. Okay, there's no other way. You're buying CMG. You're looking for upside that day. And you say to yourself, I'm willing to give up my small profits to try to catch a big one here. You understand? You're willing to give up the little profit that you have in order to catch a bigger move. And if you do give up your profit and end up taking a break even or a smaller profit, you're okay with that. That's the only way. Otherwise, it's all luck. It's not just you. There's no trader in the world that's got some secret sauce to, catching all the big winners and avoiding the small ones. I mean, there's no such thing. Over the long term, you're talking about day trading. Over the long term, there are trend traders out there that trade trends that catch big moves. But that's a whole different can of worms. They're trading on trends, big trends in the market, right? They're looking at 200-day moving averages, for crying out loud. You're looking at a 1-minute chart. So don't go off what you see on social media, let your winners run and all that. That doesn't apply to every trader. If you're a day trader, okay, if you give up every small profit because you're looking for a home run, you're not going to make any money. You're not going to make any money. You got to get a little lucky. I mean, BW, I'm telling you, when my big winners are mostly luck, okay? I'm not going to say all luck because I made the decision on a lot of them that I gave them some room to, I let them go. But everybody who trades is going to have the same complaint. You're always going to complain. You're always going to complain. Where is Ani? I skipped over. All right, Ani's saying, no matter day or swing, if your trade doesn't start working pretty quick, likelihood of it working is low. Just my experience, never let that. Again, depends on your style, Ani. I don't think I could agree with that totally, because I've seen many a times, names 3 months out just explode and do nothing over the course of the first month. So now, if you're talking about day trading, or like we said, this type of trading right here, the short-term swing trading over the course of days, that's different. I could agree with that. But if you're talking about buying something over the course of months, or longer-term positions, I can't agree with that. There's some names, look at Snap. Look at, what was, there was so many. There's so many. But again, it depends on the style, I think, more than anything else. And that's why it's important. But you're more of, I think you're more in that, Ani, you're more in that short-term swing category, aren't you? If you're buying things and you're looking for a move 3 to 6 months out, they don't always have to take off. Google's another one. Google, I remember they started buying it off flow, and they bought December's, and the stock was down like, another $25. And then they bought double the amount. And look at it now. So again, it all depends. Jim is saying, when trading a lot of risk in option calls, you can take a lot of stress out by selling a higher strike spreads. Yeah, Jim, the thing is not, a lot of players don't know that side of the game well enough. You know what I mean? I think that's the issue. Like if you're a seasoned trader, an experienced trader, especially on the options end, there's other strategies that you can put on that will help you as far as spreads and stuff like that. But the majority of traders, and especially if you're day trading, they have no use for that. So again, today was more focused on just not only new traders, but some traders that have been getting stuck in the middle. I think a lot of traders, what's been going on in this market's going higher, okay, melting up every day. And the issue has, especially more recently than anything else, everybody wants to catch that big move short term. And they have no plan. They're ignoring everything. Let me just come in and buy Facebook today because Netflix is exploding, and I think Facebook is going to explode this week. You know what I mean? And then Facebook has a decent move and then comes back down and they get drained on their weeklies. So we got a raging bull market out there, and people are having a tough time finding a way to make money because they have no roadmap, and they're trying to squeeze in trades that don't meet that style. I think it's just a huge problem right now. It's one thing I've realized more than ever too now. Two things. One, everybody wants to trade the same names. It's incredible. Everybody wants to trade the same names over and over and over again. They'll come in and they'll buy Netflix, right? They'll buy Netflix. Oh, wrong one. Hold on. They'll buy Netflix here. Okay? Then they sell it here. Then they're coming in buying Netflix again up here. You know what I mean? They're going up the ladder and trading the same name, swinging in the same name over and over and over again. It's a recipe for disaster. If you bought Netflix off sweepers down here for a swing, and you thought it was going a lot higher, you should have found a sweeper that went out. There were quite a few of them, and made a play and, raise stops and look for more. Why sell it and then buy it higher? I don't understand the logic behind that. Or just say, I nailed Netflix. I made money. Congratulations. Now I need a pullback and some decent consolidation. Otherwise, I'm looking elsewhere. But they trade the same names over and over again. And they get caught in that predicament, like I said. They'll buy weeklies. Okay? They'll be up on their weeklies, but they're looking for that score. And then they get caught in something like this, and they drain out, or they stop themselves out. So I think that's just, you may not believe it, depending on how you trade. There's a lot of that going on. A lot of that going on right now. Brent is saying, I typically go into an options position willing to hold it to the downside 40 to 50% and usually mess with monthlies. So Brent, again, the thing is, so you're looking for what though? In other words, what style of trader are you? You're a swing trader? Swing. So you're saying to yourself, your downside is 50%, and your upside, you're looking for 50% or better over the course of months? And listen, that may be your strategy, and as long as you have a strategy mapped out that you're finding success over, or at least it's keeping you emotionally in check, then you're fine. You're fine. So Brent's saying, 3 months out. So he has a particular strategy. So in other words, rather than letting them go to zero, or rather than getting stressed out on the day-to-day activities in the name, Brent's saying if those calls, he's down 50%, he's pulling the plug. Now, Brent, you obviously realize that a stock may not even come in or come down that much, but your calls can prem out and be down 50%. You know what I mean? So obviously he's aware of that, he's okay with that, but that's his roadmap. That's his, guideline that he goes off of. And for him, it takes the stress out of the game, right? At least he knows, listen, if these calls go down 50%, I'm done. He's not going to say, oh, what should I do with Netflix? Look, if the calls are down 50%, he's done. So, I mean, it makes sense, Brent. Like I said, each and every individual trader, I don't know what type of accounts size you're dealing with, what, who you are, how you're emotionally wired. I know none of that, okay? You guys know yourselves better than anybody, right? You be honest with yourselves in this game. Otherwise, you're in deep, deep trouble. So you know what's best for you. You shouldn't be asking anybody. If it's okay to get ideas from other people, but you have to make the decision of what suits you best. And trust me, nobody knows what a stock is doing. So save your breath. Save your breath. Like Brent is saying, if his calls are down 50%, he's getting out. It shouldn't matter what I tell him, you tell him, he tells him, this one tells him. Let me get some more people I skipped over. Napora, if everyone is the same name, try to exit from the same door, what could happen? Flash crash? What name are you talking about, Napora? Oh, because I'm saying the same name? Yeah. There's gonna be something exciting soon. There'll be something exciting. That doesn't last forever, Napora. You don't get the riffraff money playing the same names over and over and over and over, and that lasts forever. I mean, let's be honest. I'm not even making a bold statement here, right? I mean, let's be honest with each other. It's only a matter of time before they get hit over the head and washed out. Only a matter of time. Brian saying, if a trader believes a stock is going substantially higher, why do they buy calls that are in the money and go out 6 months? Good question, Brian. You're probably talking about some of the sweeper activity that gets me excited, okay? You got to understand, the sharp money, they don't, I don't want to use the wrong word play, but they don't bet significantly on out of the money weeklies. They don't fool around with that stuff. That's spec money. That's people speculating. That's algos firing. Okay? I'm talking about the Elliott Managements of the world, the David Teppers of the world, the Bill Millers of the world. They don't go in and tattoo weeklies. Okay? What they do is they go buy up equity in a name, right? And then they use the option market and try to utilize some leverage. They go deep in the money and sprinkle in some calls. Sprinkle in millions of dollars. But that's what they do. They don't buy something $8 out of the money for 20 cents. That's pure speculation. Now listen, I'm not saying you can't make money with that stuff. Some of that stuff works out just fine. But when I say Sharpies, that's what I mean by Sharpies. There's no Sharpie, buying JD weeklies for 20 cents. They're pros. Obviously something out there speculating on some upside. But, when you see Elliott Management, when they came into the ARNC initially and names like that, they lay wood. You see that name, this one? I keep forgetting the symbol. Jesus. Oh, GBT, right? You see this name? You saw that March action that came in? That's, that's somebody like that. That's not. They don't fool around the cheap stuff. That's my point. So it depends though now, okay? It's funny. and I'm not saying I got a fan club trying to copycat, but for some reason now the deep in the money calls have got out there, and now people asking me are deep in the money. I see people touting deep in the money. Deep in the money can be misleading at times because if it's tied to stock, it's stock replacement. That's a big difference now. Okay? In other words, if GBT was tied to stock, somebody sold equity and replaced it with deep in the money calls. That's not as bullish, nowhere near as bullish. So it's not just about, again, the deep in the money calls. It's with everything in flow. It's the way they were bought. The aggressive way they were bought. That's what it was. So for example, this GBT, somebody came in, bought a huge block, right? I think it was $1 million and change. And then all around it, aggressively, across multiple exchanges, they're sweeping in the money calls in 200 lots. Each 200 lot was like a $500,000 sweep. So again, you know, and to tie this name to what we were talking about strategy-wise, you know, what this name is going to do over the next day, couple days, weeks, I have no idea. I don't know. Who knows? That trade obviously wasn't for the next week. Maybe this thing explodes, gaps up to 45 Monday. I don't know. But a trade like that, you know, you're looking for it to fit your style. You can't buy weekly. I don't even know. I'm just giving the example. You can't buy weeklies in this thing. Well, you could, but you have to manage the trade and have, again, a roadmap as far as your risk and where you're pulling the plug if you don't see momentum off it. But that was more suited for a swing trade, a position trade type thing. I mean, that was perfectly mapped out for that. That's the type of stuff you would look for. So, like, Ani, goes to your point, like you were saying, all the stuff works out initially, then doesn't. I mean, this GBT can come down to $29, $28 over the next month. And, you know, what you're saying is, if it does, it's game over. But we could turn around in February and this thing could be $70 a share. So I guess it all depends, you know, what you're looking for. I know a lot of us, listen, we don't have the patience. I can give you names of flow that had time behind them that your jaw will drop of where these stocks ended up. All kidding aside. But if a stock doesn't move over that week or 2 weeks, we all lose interest. You can call yourself a swing trader, a position trader, but more than likely, you fall in to this category right here, this second line right here, if you're trading options. Short-term flip swing. And I get it. I like it. I like that. You know, I like it. But you got to look for the right stuff. You know, you got to look for the right stuff, and you got to be willing to either pull the plug or let those calls go to zero, depending on, you know, how you structure your strategy. If you don't get what you like, you know, I like that that you see Marriott catch weeklies with earnings in November, and you're just playing off the juice. Right? You get the juice, fantastic. You don't get some juice, like Ani's saying, the next day or so, you're pulling the plug. So I think most of you out there, not all of you, I know some of you guys are longer term, most of you fall into that category. Steven's saying, in the money options can still get 3, 4, 5 times. Of course, of course. Yeah, I mean, look at, and not even in the money, just some of the big ones. Look at that Amazon guy, that bazooka. Remember the Amazon bazooka? You see what those calls are worth now? Do some math. Do some math on that Amazon guy when you get a chance. See what he's up dollar-wise right now. Let's see. These two. Where's the... Oh, there was another guy. He's not even on there. These expired. There was another December guy who laid some big wood. So do the math on this guy who bought basically the 960s, November 960 calls, right? When the stock was 956. He paid $30-something. 30-something. So yeah, that's why they do it. They make big money, but that's a confident bet, right? I mean, that's why that was labeled a bazooka. This guy didn't go out and buy some out of the money calls for 70 cents in Amazon into earnings. This guy paid $32. You know, honestly, I told you guys what happened. It was the biggest sweep I think I've seen. I've never seen bigger than that in the sweep. Clean? Never. I've seen blocks bigger than that. You know, look at this guy here had blocks. Yeah, but these are blocks. I've never seen a sweep $9 million. And then there was another one with it, if you guys remember. If you guys remember the... Oh, come on. You guys remember the other one? What was he, December's? He was not bad looking either. Hold on. Let's go to action after that. Hold on. If it's... Oh, I could have looked it up on mine, too. Hold on. That's probably the best. I just want to find it there so you can see... Yeah, but that's to answer your question before. I forgot who even asked it, but when you see deep in the money stuff and they're clean, and not deep in the money, just in, you know, the cheap premium stuff. That's the stuff that they don't fool around with. I can't believe. Where is this? I had it on mine. Whatever. You guys know what I'm talking about. There was another one too. See this Twitter search? Has its moments. Wall Street uses Amazon. It doesn't even let me search it. Anyway, let me get to a couple other names here. Oh, what I do? Oh. He's right. Wait, no, because I was doing the... Now I could probably find it. See, I need you guys to help me out. There it is. Yeah, this top guy. This top guy here. So, yeah, 331 of the December 985s. Look what he paid. $32.50. You know? And the stock 985s, yeah, December he went out to. This was the bazooka guy. 2,400 November 960s. He paid $35.76. I think they're, what are they, worth 50 something? Last I checked. You know? So, but yeah, that's when you see things like this and they're clean, you know, not tied to stock or anything. That's why it catches your eye. But these are once in a blue moon. Like I said, I've never seen a sweep of that size before. All right. So, you know, again, that name, there's an example of a name that really applies to everybody, right? I mean, people were looking to flip it over the short term. People wanted to hold it up until numbers, maybe leave a runner through numbers, you know, a whole bunch of, I can't get this off now. You know, so that's one of the type of orders that can apply to almost everybody. Look at this. I'm throwing arrows all over the place. You see this? Hang on. Bear with me. Oh, there we go. All right. Let me just get to a couple other questions and then hold on. I'm trying to go in chronological order. Okay. Who? Oh, I answered that. In regards to stuff, I don't know talk about this. Yeah, so I'm seeing a lot of questions on stops on options, and it is tricky. It's not easy. It's not easy. I think, guys, all kidding aside, I don't know everybody's style of trading out there, okay? But I think right now, and listen, we're seeing the smart money do it, okay? So we're seeing the smart money take this approach constantly. And what I mean by that is they're selling equity and replacing that equity position with calls. All right? And again, the reason why you do it is because you have a defined risk. You understand? You have a defined risk. You don't have to worry about some sort of flash crash like Nipor's asking. What happens when they get out of all these FANG names at once? Or, you know what I mean? And you're okay with it. You're okay with it. You know? And I think right now more than ever, because this is a tricky spot here. I mean, you don't have to be some market guru to know this is a tricky spot. You don't want to have too much risk on the table up here going into earnings season. It just doesn't make sense. So you can take a lighter approach to things by putting in what you're willing to lose as far as premium and still have upside exposure there without the stress of shakeouts and everything else. You know, so I don't know, do many of you guys utilize that strategy at all? Do any of you guys trade like that? Not even a lot. I mean, all the time. Do any of you trade maybe particular situations, certain type of situations where I know a lot of people who trade when it comes to biotechs, that's how they treat it. Just put into those calls what they're willing to lose, right? Why? Because if you get caught in some FDA data or something like that, and you get some negative news, you lose what you put in. If you got caught in the stock, here's an example: AAOI, right? Were they warned or something? So if you put in what you're willing to lose into the calls, it went to zero, but you were playing. That's your stop loss. VWAP, I don't use it, Randy. I don't really use too much, to be quite honest with you. I don't use too much. Basically, I'm staring at flow all day, and I look at sentiment a lot. You know, as far as charts, I don't. I'm even getting tired of candlesticks, to be quite honest with you. I'm gonna go back to what do they call it? Bar. I'm getting tired of the candlestick things. Man, sometimes I can't get a read on it. I'm not a candlestick guy, but because a lot of members are, this is a screen I show these charts, so I leave it up there. But I can't. I like clean, simple. Sometimes you want them to look pretty, the charts, but I don't have much of an edge with charts. For me, I never had swing trading or position trading. For me, it's pretty simple. I like buying at a consolidation. That's my favorite pattern. So, you know what I mean? I don't like chasing, and I love when stuff looks dead and catches flow. Yes, John, I should have spoke a little bit about that. John's asking about overall sentiment, which is really interesting, okay? Here's what I see. A lot of people talking about euphoria. I don't really see that, okay? I see bullishness, but that's normal when a market's like this. You know what I mean? This is, of course, you're going to see bullish sentiment when you see this. Like, I'm not seeing any extreme on the put to call side, any extreme on the retail speculative type side. Coming into this, John, and I don't know if I mentioned, I actually might have mentioned it. I don't know if you were on the webinar the last 2 weeks. Before this lift here, hedge fund exposure was down dramatically. In other words, hedge funds were selling this market aggressively. So once you got a squeeze out of this and the market running away, they got to get back in, right? They had no exposure, literally. Those of you who are members know what I'm talking about. The hedge fund exposure was, at bullish contrarian buy points off this little pull, which is incredible. So I'm not seeing that extreme bullishness out there, okay? It is bullish, though. But here's what I think can happen. I think on any decent wash, it's going to end up being an opportunity to look to get long again, because you already have the bears waiting to try to catch this top. That's all they're talking about. And like I told you, not to sound old, when I got into this game and the 99 bubble, I mean, people comparing to that, you couldn't find a bear for the life of you. For the life of you. It was absurd. You think the NVIDIA target prices and Netflix target prices that are coming out from analysts now are absurd? You had Henry Blodgett upgrading CMGI and AOL and doubling their target price every week. So I'm not seeing the euphoria. Now, that doesn't mean the market can't pull back. I'm just saying the euphoria people are trying to imply that's out there. It's not there, okay, from what I look at. And again, I want a pullback. Ultimately, will set up an opportunity to buy. But up here, it's dangerous. It's dangerous up here. Anytime you're in melt-up mode of this, it becomes dangerous, especially into earnings season, So what I mean dangerous is if you trade options, okay, if you're holding calls overnight, you got to be okay with those things going to zero. That's the mentality to have right now. Okay, so whether you're playing with just profits, lightening up position sizing, whatever the case, you got to say to yourself, if this thing has a wash and my calls get whacked, I'm okay with that. That's what I'm willing to risk to see more upside from here. Now, for a lot of you out there, that may not sound something, a great risk-reward scenario. So that means just stay lighter. Instead of holding 3 positions, hold 1 position. Right? The thing is, you try not to move totally to the sidelines if you're still seeing your signals line up. Okay, so like an example for me, if there's still flow, then there's no reason for me not to participate, even if it's a smaller way, because then you can miss a melt up like this. But that's the simple way to look at it right now on the option end, because that can happen like this, guys, like this. That's what everybody's concerned about out there as far as people managing money. What do you think? That's why they're concerned. You got hedge funds giving money back because they can't find any value out there, because they're not like us. They can't buy and sell in 2 days. They got to build positions, and if they get caught in some sort of flash crash with those positions, they're dead. They're not like us. We're trading our own money. So basically, you can trim your exposure. You can sell in the snap of a finger. You can be as quick as lightning. But that's that's the way I would look at it. BW saying Qualcomm went up over $100 in one day, and the price target to 1,000. It was craziness. I don't know how people compare it to now. They're nuts. And then you had names that weren't making, forget about profitable. They weren't even making anything that were exploding. Whole different can of worms. But again, it's one thing or the other, right? With everybody, it's either euphoria, bubble, or crash. There's never an in-between. You ever realize that? There's always somebody either calling, a bubble, a huge rally, or a crash. There's never just maybe, bull market, right? Maybe we're just in a bull market. This is what a bull market looks like. So, but yeah, short term, me personally, I would play nice and easy. And not only that, you have earnings. You got a lot of stuff priced to perfection with earnings out there. You got to be careful here. That's all. Even if they go higher, you spit on them, and there'll be a pullback and an opportunity, some consolidation at some point where you can look to get active again. But right now, you just, this is a let your winners run, let your runners run type market. And you take a nice and easy approach. As far as flow is concerned, like you can count on a couple fingers the quality of the flow that hasn't really taken off yet, and you have earnings too. You got, like the CAVM. I don't know if you guys remember that name. A semi name. Had some really nice action in December's. Actually floated a little bit lower over the last couple of days. So this one really hasn't moved higher yet. You do have earnings in November, though. Everything else, especially in the tech world and all, you have this type of lift and the market obviously is the reason why. So that's the problem. Like, here's an example I'm saying. ADSK, okay? You had pullback, a little sideways here, caught some really nice action, okay? So now you get this lift. What do you do now? Okay, let's say you sold at some point here. What are you going to rebuy ADSK up here if it catches flow? That's the predicament we're in. And, the couple of names out there that are lingering, like the CAVM, if the market does pull, this will probably pull with it. There's always, listen, at the end of every move, there are always one or two names that get caught that came in late. Always. Always. There's nothing and that has nothing to do with flow or anything else. If all the semis pull, you think the CAVM, because the sweeper flow is impressive, is not going to pull? That's not likely. I'll probably pull with the group. So that's the risk you run up here. I mean, look at them. Look at these names, guys. Look at this. AMAT. Intel. Remember we were talking about Intel and the flow in Intel? Just floating high. Look at this little pullback. GM. I mean, for crying out loud. They buy GM every day. It's getting stupid out there. Every day. The FANG names we talk about, that's why we were so excited about Amazon, because, look where they bought this thing. It was one of the few left, right? The Adobe, that didn't look like you were buying the top of a skyscraper. So, yeah, ATVI had a little pull, that had some action. See, I like that, but here's the thing, like, you look at this move. They're crazy. So this is good, though, this ATVI. You wanted to come hang around here a little bit. The credit card names, you see these things? They were buying MasterCard last week, all the way up here. PayPal, Yeah, Charter had two big orders. I think it has earnings, right? I think it has earnings. They all have earnings. They all have earnings. Square, Micron, like, it's getting silly. It's getting silly. So again, you want. I don't want to sound like a wet blanket. You know, no one's more bullish than me. You just up here is where you want to be careful. That's all. Still participate if you like something, but be careful. You know, because even if we don't get a big pull, more than likely you'll get something like this. You know, and depending on what calls you're in, they'll pre-mount nicely. Yeah, Jim saying that SQ was a missile. And you know, they were buying Jans. Remember how many Jans they bought in this SQ? They forget it. Forget it. The Micron, that's another one getting stupid. I mean, this is Micron. You know, that's why, again, AMD, that's why we were, you know, we got a little excited about that flow. You know, because it came in off of consolidation here. I like that. I feel more comfortable with that. I feel like I have an edge in that. Like right now, and we saw square sweepers. There were square sweepers last week. You know, besides just a quick trade off the momentum, what edge do you have in this name now? It's like when, you know, you're just waiting for the music to stop at this point. DNKN, I don't really have an opinion. I know it's caught some action, but earnings. So always catches some earnings action. Guys, honestly, I'm not going to brush off. I don't mean to brush off a lot of the names you're throwing at me, but if they have earnings, you know my feelings on that. You know, for me personally, there are two trades right now. Okay, one is that quick flip strategy that we spoke about. Okay, that's Marriott. That's like a JD, where, like I said, Marriott has earnings. They bought weeklies, right? Make sense? Wasn't their earnings play? They played weeklies. So you're looking for that quick move, and you get the hell out. They did it with MasterCard, same thing. You know, you're not talking about huge moves, but those are quick trades right now. The other stuff, I would try to stick with the best of action, but there's even, you know, there's a lot more risk than usual there too. One, because the market is long in the tooth rally-wise, and earnings. This one is an example, that CAVM. Okay, again, not to make excuses, but if this didn't catch earnings and came at the earlier stages of if this came a month ago, before this big semi move, this thing would be one of the best plays out there. They came after December calls aggressively twice. Twice. It does catch earnings though, you know, so you can play the run up into earnings. Your risk is at the moment. That's your risk. We spoke about that GBT. That was the best order flow, period. You know, now that Amazon has lifted, this is the best on the board. You know, you got your buddy Stephen Cohen is in this name, right? So, and these are March calls. I'll show you. I don't know if, did you guys see this action? I think I posted it on Twitter, right? The GBT. I know those of you who are members, I know you guys know, but I'm talking about some of you others. You know, did you guys see this GBT action? Here is the initial buyer. So this guy comes in, puts $1 million bet in a block, opening bet, on the March 40 line, March 40 calls. Okay, so that in itself, that order is a big block, right? Impressive. But that's not what I even liked about it. If that didn't even happen, I would still like the name. because of this. Okay, so here's the big block. This is the big block right here. Then here's a sweeper. It sweeps multiple exchanges and sweeps up 450. Small lot, right? What a piker. A little piker. March, 25 calls, pays 1090. So this is $500,000. Where's the dollar amount here? Is this it? Yeah, here it is. $500,000. Then another 278. You love these numbers, right? 456, 278. March 25 line again. 1089. Swept multiple exchanges. And the 300 grand. There were even more than this. This were just the top three. Then 197. All right, little guy. Pays up. It's aggressive, right? Look at this. He just paid 50 cents higher here. I would have flipped him. He paid 50 cents higher. Multiple exchanges. And he dumped in another measly 227 grand. You think this dude is bullish? This is my bull. That's a horn. Pretty bullish, no? So, but the key is this, again, to keep in mind. March, okay? March. Again, it doesn't mean it will take that long, but you got, well, what am I circling the wrong things here? You got to understand it's March, you know? I've seen, one of the sharpest orders I've seen, all kidding aside, was a leap sweeper at the time. It wasn't that far out. It was a little over a year out. Forex Labs, FRX. Some of you who know me that long may remember. Came in Friday, early afternoon, and was sweeping throughout the afternoon into the bell. And Monday, I think it was Icon or somebody got involved, announced that he was involved. Now here you have Cohen involved. So we kind of already know of a Sharpie here, no? I wish he wasn't involved, to tell you the truth. How long are they holding big far out sweeps like that? They're not selling those things. When you see action like this, you know, I'm not all the time, but most of the time it's somebody getting involved, you know, stake-wise, activist-wise, stuff like that. Remember this? Oh, by the way, you got a little pull on this after a quick move. Hopefully this consolidates a little, because this is another one. You know, you remember this SGMS? Remember we were talking about this? So, Silas, this was something we saw similar activity in, but this was way back when. They were buying leaps, all sorts of different things, and, you know, look at this move. So what happened is, I mean, this court action, I can't even tell you how many times court action here, and then this was a big news day, took off, and then recently, same thing, after a huge move, floated lower, consolidated, they started sweeping it again, right around when they were sweeping IGT, remember that IGT? They actually hit the IGT first, they started sweeping this, move higher, and then it caught sharp action again in leaps here, and some front month stuff, smaller. So it could have been traded off the front month stuff. You could see it had a nice lift. It was up every day. But now you see it taking a breather, and there's still a 2019 they bought on the leap side. That don't look right, that picture. So yeah, the ideal scenario here would be this comes in. That's the problem. Like where does this come in? You know, how far does it come in? You got earnings, right? You got a number of things. You got to take a longer term view on this name. You have to. You have no choice here. The short term trade was this move. This was the short term trade here. You know, now at this point, or if you're still in it, you got to have a longer term view here. But hopefully it does something close to this, maybe not as lengthy. We'll see how earnings are, and maybe we can play it again. But that's an example, Silas, of that SGMS. But yeah, I like this thing longer term, without a doubt, with all that action. I don't know what is going on there, but there is some sharp money in this. It has been in it. Has been in it for a long time. I think it was like $16 it started. You know, the big move has happened here in the summer to now. But yeah, you know, you don't see that type of action all the time. You don't see it all the time. You know, you see it once in a while. We saw it in ARNC before Elliott. ARNC had some action here too. They have earnings coming up. This thing might move next week. Something to keep an eye on next week. The problem is Elliott is already involved. You know, you hear me talk about that. You don't understand. It's a big deal for me. It's a big deal. Because like right here, we saw really standout action come in here throughout this whole thing. Okay? Really sharp activity. And then we got the news Elliott Management got involved. You understand? So now Elliott's involved, and we've seen it's been quiet. It's been quiet for a long time. Just recently, just last week, some Novembers and a little bit of Octobers, one day of Octobers. But they do have earnings coming up too. So a couple things going on there. You know what I compare this to? Remember, maybe not even, hold on. I compare it to this NRG. Remember this NRG play? Just not that long ago? So same exact thing happened here. Throughout all this, you had really nice activity. They kept buying. Then, I think this is Jana, right? This is not Elliott. I think this is Jana. You had, oh wow, Tepper too? See, I don't even know. So you had that sharp action come in. Then the news of Jana or Tepper, one or the other, came in. Then you got this reaction, okay? You know, topped out around here. And then quiet, some big blocks, but they were stock replacement went off. You guys remember, we were talking about it. And then what changed here, sweepers showed up again. Remember? So it's not, the action's not as solid as before the news of Jana or whoever got involved. But sweeper showed up, so you had a trade there, and there was a trade. You know, it may go higher from here, but this was the trade, basically. So that's kind of where the ARNC falls into. The only thing, you got earnings, you got to navigate. But anybody else have any names other than Fang? You know, all the Fang look, the flow's been incredible in all of them, guys. It's been incredible across the board, you know, across the board. Netflix, you know, that's one of my favorite names of the Fang to trade. Caught real nice action, you know, aggressive action. It's gone now, though. And you got earnings Monday, right? Yeah, X, you know, it's funny you mention X because it kind of pissed me off. I was hoping for more action off this little fade. And just small, it wasn't, you know, the buying wasn't as impressive. But now you got this gap. Had a nice move. You know, had a real nice move. I was hoping, because again, everything else is so fried that we'd see a little more activity come in off this fade. There's been some, but It kind of pissed me off because this is a nice move. Caterpillar, again, has had, listen, Caterpillar is not a name that catches a lot of flow, but had some really good-looking sweepers. Caterpillar doesn't catch a lot. But like everything else, what happened? Let me X this out. Like everything else, Caterpillar's fried at this point. And they have earnings. I mean, look at this action in Caterpillar here. Let's see, anything still open? Well, look at this. October's, recently, holy moly. When was this? October 10th. So this is just recently. The stock was 28. You got an $800,000 sweeper there. When's earnings on Cat? Anybody have an earnings date on Cat? Should be really soon, right? Oh, Monday. What are we going to do with this now? So that's the other predicament here. Earnings with all these things. So if you're in Cat and you're most likely sitting on profits, obviously, I would trim it and let a piece ride. I would leave a piece. Yeah, but you have a big move here into earnings. Like, look at this just recently. They just swept. They just bumped in 3 million plus when the stock was a little under 128, 128-ish. And that was just last week. The stock hit 131 and change. That's $3 in what? When was that? Right here. Yeah, Jim just mentioned a couple of interesting names. OLED, interesting action. Earnings again, but interesting action. December's. This name, they absolutely nailed a couple times. One was right here, this one. They were buying this consolidation. It was a couple like small, clever sweepers, and then they caught this. I don't remember, I think it was earnings though. But this OLED, some nice buying Friday. And Jim is mentioning Avgo, which they've been buying this lower end of the range. Some big time orders, some of it tied to stock, but some big time orders, November, December's. Had a nice little lift last week. And SWKS caught a little bit of action. That has earnings too. My two favorite names were the Adobe and ADSK. I don't know if you guys know that name. Why were they my favorite? Well, Adobe sweepers are usually money there. What happened? I'll show you. You guys probably, you guys know the Adobe sweep if you're members, because look, like there's nothing else around, you see? There's one order, and she was a beauty. $450,000 sweep, multiple exchanges. The stock was 145-ish, October's. That was back on 9/26. 9/26. So look at 9/26. Right here. Look at that. Look at that spot. Look at that spot. See, that's what I like. That's a beautiful thing right there. This candle. You see? Nice. Right? Pull back. Right there. $500,000 sweep in a name in a name that doesn't really catch much sweeper activity. And away she went. And the AD, you see, I like this. I found this new drawing thing. You see, I'm getting a kick out of it here, right? I feel like Madden. You know John Madden, football? So you got this, you got the line here, right? You got a tight end here. The quarterback rolls out to his left, tight end to the sidelines here, and bam! Yeah, Delta, the airlines have just been incredible, Sean. Incredible. The Delta caught a ton of flow. I ignored it because I hate the airlines. JetBlue, caught some nice action. Southwest caught some action. AAL. What else? UAL, they just rolled the other day. I think it was Friday. All of them. But Delta, yeah, Delta had some size. Delta had some size. See, the problem with Delta, Delta catches a lot of size. And the airlines, I'm not going to lie to you, they're tricky. I've seen a lot of calls go bust on these airlines. You know, you got a lot of hands in them. Sometimes the size sweepers do better. Yeah, here's the October action in Delta. When did Delta started its move? Well, here's the October action here. DDD. What's that DD? Oh, DDD is the 3D imaging thing. Yeah, there was flow there. I don't really, let me see. I think there was a bet there. November 15th. Oh, recently. When's earnings on that thing? Could be probably earnings related. Yeah, it's probably earnings related, HTS. Otherwise, they'd be buying it on this dip. You know, it could be a short hedging into earnings. You don't want to sell it short. You know, you could say that about all the action, guys. All the action now. I'm not making excuses. Even the stocks that are going higher, you could say that for. You know, that's why I'm saying now you want to be really selective, stay light, and stick with the best action out there. Because one order could mean anything. Like I always say, we never know the true intent behind any of these orders. We don't know these guys personally, okay? But we do know around earnings and events, the odds of hedging and protection go up dramatically. So you want to stay away from that stuff. You know, you want to be selective in that stuff. And then you could see it just in the flow. Those of you who are members know. Look at this flow. It's been a menagerie since we've gone into earnings season. There wasn't a put buyer to be found for ages. You know, now you get a string of puts, calls. It wasn't even that bad. Friday was more bullish than usual. Look at the day prior. Look at, you know, red. Look at this, red. You know, very sloppy, very sloppy. That's earnings. That's what happens. Nothing new. By the way, did you hear George Soros with those MGM puts? Did you hear about that? How shady is that? You didn't hear that, Jim? $40 million bet on the MGM puts before the attack. I said 37 million bear bet. I'm telling you, I'll get the link, Jim. I'll shoot it to you on Twitter. And CEO dumping stock like wild. Like crazy. What is this? You guys will get a kick out of this. That's some shady. Listen, I'm no conspiracy theorist, but that's some shady stuff, that Vegas thing. And if you're a gambler and you know casinos, you know exactly what I'm talking about. A player of that caliber being a complete ghost like that. Is it inside a oh yeah, here it is. I mean, there's a lot of shady stuff, Jim. There's a lot of stuff to investigate. A lot of stuff to investigate that doesn't look like it's getting investigated. Where's the CEO here? I don't know if you guys can make this out. You see all this? You see all that? S, 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 sold. All these sellers. Where's the CEO? I want to show you the CEO, how much he dumped. What's his name again? Here he is. So these have a P with a star next to them. That means he exercised options and then dumped them. He dumped, I heard some crazy stuff that he dumped 75% of his whole, I couldn't believe the numbers, so don't hold me to it. But these are all, besides this here, where those are, he exercised some options, these are all sells from the CEO, James Murren. Look. MGM. And yeah, I'll find that link with Soros. Spooky. I sound like a conspiracy theorist, but it's nuts. So yeah. All right, boys and girls. Like I said, this thing again, it's nothing magic, but just understanding, you know, what type of player you are, what you're looking for. You've heard me say it numerous amount of times. For me, was so important, so important. Having that guideline to just, you know, fall back on, get the majority of emotion out of the equation. That's when you get into trouble in this market. So, you know, figure out where you fall in ahead of time before you click a buy button. And, you know, as far as the overall market right now, I mean, my recommendation, especially, you know, you most likely made some money on this run-up, all right? Try not to give a lot of it back. That's the name of the game here. You want to still participate if you like things, okay? But stay light. You could take the approach where you're willing to lose what you put in. I think that's a fantastic approach right now on the option end, being that it's earnings season and that we've come a long way. You know, a couple of people I know just betting on the name got caught in this AAOI, and shit like this happens. Okay, it happens. What I'm saying now is not going to prevent this fluky stuff from happening. You get caught, but this is what you're looking to guard against now around earnings season, and that we've come a long way. By the way, just quickly, people are asking me if AAOI caught any action. No action into the dip yet. We spoke about AAOI. The only action it caught was here, remember? There was a half-decent looking bet there. You had this move, and then it was stuff that expired, small weekly potatoes. Nothing really extravagant. Yeah, I mean, you know, again, if you're in AOI and you're in calls and you're willing to have them go to zero as a stop loss, you're actually happy. You know, I mean, you're not happy you lost money, but you're happy you were positioned like that. I think that's a decent approach to take right now. HTS is saying, can you talk about what you would do when you're caught? Yeah, I mean, depending on what do you mean by caught? I mean, that's basically what it comes down to. You know, like I said, if you're in options, they're worthless. So, yeah, there's no reason to sell them worthless. If you have time behind them, I don't know which ones you would have. You know, you're hanging on to them. If you're in stock, I mean, I'm just pulling the plug here. You know, I'm not trying to force something good out of this equation. I take my lump and move on. You know, and listen, if you're an equities player, okay, and you're juggling numerous positions, if you're a position trader, this happens. You know, when I stopped swing trading, this was happening a lot. But the difference was, the reason I stopped swing trading, the upside wasn't worth this risk. You know, now at least you have the upside out there worth it, right? Stocks are flying. So you run into this on some bad luck, it happens. But the moral of the story, what you take out of this is position sizing. That's it. You know, if your whole account's in AAOI, right? I mean, so when you're trading equity, even options, I mean, of course, but you got to be careful as far as your position sizing in names. And this will make a dent on your P&L, okay, if you got caught in this. But, you know, it's part of the game. You know, you don't look to force something out of this. You just stick to your rules. You do what you do. You follow what you're supposed to be following. As long as you did everything right. In other words, let's say you bought some equity, right? And you were playing for a move and you had a stop loss. Your stop loss did you nothing, right? On the equity. So there's nothing you can do about it. I mean, that's the risk you take with stop losses in equity, no matter what style. If you're a trend trader and we're buying and playing this trend, you know, just, I'm not even talking about AAOI in particular, just any name, and she gaps down on some fraud or accounting irregularities or something like that, I mean, it's bad luck. It's bad luck. You know, there's nothing you can do. Now, you know, as far as flow, there was no flow in this name that would tell me to sit in this name, if that's what you're asking. Like I said, there was a sweep here for a short-term trade, and I mean, let's be honest, this move here was more than tradable. This was an explosion. Stock ran 15 points. You know, so if you were looking for more there, I mean, by right, you should be out of this thing. Let's be honest. And there hasn't been any flow after that. You know, I'll show you guys the flow, just so you know. Yeah, you guys, a couple of you were asking me about this name the last couple of weeks. There just, you know, there wasn't much of any action to get excited over. Let's see. It was small weeklies, but I think they expired already. Let's see. Those expired. Here's the bet. Yeah, I mean, it wasn't even one sweep. Here it is, 9.5. So here was the one sweeper. $57 the stock was on 9.5. Okay, you see, after that, he had a block, $30,000 block. That doesn't even count as a bet. It wasn't even a sweep. So on 9.5, that's back here. Look, that was a nice trade. Those expire next week, too. So, again, there's no flow. There was no sharp leap buying. There was nothing like that. So if you're in this name, unfortunately, and you're in equity, yeah, you got to get out. You got to get out. I mean, what? If this is not confirmation you were wrong, what the hell else you want? But at the same time, don't let it bother you. Don't let it get to you. You know what I mean? Don't let it get to you. It's part of the game. And that's why if you're still trying to figure things out, take it nice and easy. Don't worry about everybody else and how much money they're making. Most of them are full of shit to begin with. If you're trying to figure things out, you take it nice and easy. And right now, with a market the way we look here after a move like this, I think the only approach as a swing trader is you put in what you're willing to lose. It makes you stay small. Don't go out and put on 5 different call positions. If you right now go open up calls Netflix, Facebook, Baba, Google, and we get a pull, you're done. You're done. You know, you want to be most aggressive out of this, right? We talk about that all the time. Out of this, you look to be most aggressive. And then, I mean, that's how I was taught, the funnel approach. You know, like a funnel? All right? So it looks like this, let's say. A funnel, a pennant, whatever you want to call it. Okay? So as here flow starts to heat up, they start buying out of this consolidation, here's where you're looking at max risk. Here's where you're looking at if you like 3, 4 names you want to put them on. Okay? And then as the rally stretches out, you know, like a funnel, you get lighter and lighter, thinner and thinner, until we get another pull. And then hopefully we go sideways, base out a little bit, and then the flow heats up again, and then we do that. You know? So as this rally keeps going, even if it continues to go, maybe we go higher, maybe we melt up completely. But you don't put on more risk as that happens, less risk. Make sense? But this is the sweet spot. This is the sweet spot right here. When you come out of consolidation or a pullback and the trend starts to change, the flow starts to change, that's where you want to make the bulk of your money. And then after that point, your main objective is to keep that money. So if you get caught, you only give back a piece of it, and you keep a nice chunk. You know, you keep a nice chunk that you made here. And that applies to everything. Here you had a nice little pull. Here we start to move, flow heats up. Here's the move. And again, as the move stretches out without a pullback, you get thinner and thinner and thinner. Randy saying, call me Coach Jesus. I like this board. All right. So everybody have a good weekend. Thanks for coming by, guys. I've completely lost my mind, I think, at this point. Thanks for coming by. Have a good weekend, everybody. Good luck next week. Be careful. Earnings. All right? And I'll talk to you guys soon. If you have any questions, you know where to find me. Again, wallstreetjesus.com. If you're curious about any of these, any of the stuff we got going on. Again, we got that free trial, 3 days. Okay? You'll get a pretty good feel for it. You get a pretty good feel for everything. The only thing you won't be able to post, but you'll get the live video, everything else like that. That's that 3-day trial. You go to wallstreetjesus.com. Also, I get questions on the private Twitter. We offer private Twitter. By the way, in the trial, private Twitter is not included. All right. But private Twitter, we spun off on itself. You get that for $60 a month. That's all the alerts, some open interest, sentiment stuff. But no access to the Steamroom. All right. Any questions, let me know. Have a good weekend, everybody.